Okay, YouTubers, my YouTube peeps, friends, buddies, relatives, and chums. So let me try to explain options trading, my understanding of it, and what I did based on my understanding of it. I'm emphasizing my because this is option trading is easy but complicated until you understand it, and I don't understand it completely, but I understand it enough to do one type of option trading, and this is my first trade. So let me show you what I did. Basically, in option trade, you have calls and puts, and in the simple explanation, a call is you saying you're thinking the stock is going to go up. A put is you saying you think the stock is going to go down. All I know how to do is a call, but a put is just the opposite of a call. But let's just talk about a call. So what I did here, and shout out to Andre. Andre hooked me up and showed me how to do this call thing. Andre is my son, so I got that information free. I don't know if he's gonna charge you to do it, but I don't know. Probably if you hit him up, he might try to explain something to you, but he was real patient with me, so I wouldn't expect to get the same thing. But a lot of this you can really figure out for yourself by watching YouTube videos, to be honest with you, and then maybe asking a few questions. But the way it's understood to me, or it's explained to me, and where I understand it from looking at YouTube, I did a call. First I did one on Ford, and I kind of panicked. Bruh. So when you're looking at this, right, and I hope you can see this, this is a call, one contract, and a contract equals 100 shares of a stock. So I bought one contract, 100 shares of Ford stock and a call. See, it says call. And I bought it at 51 cents. Now here's the beauty of it. If you try to buy 100 shares of Ford, which Ford is about, let's just say $5 right now, that would cost you $500. Well, I bought 100 shares of Ford at $51 a piece. So I end up getting 100 shares for roughly like $51 and some change. And what I was saying is that, or what I was ensuring is, when you do a call, you're saying, one, I'm betting that Ford is going to go up, and if it does go up by the time of this date, which is the expiration date, and you need to go and look and see the details on what expiration date means, because it's more than just the expiration. But basically, if you execute the stock, sell it before then, not execute, but if you sell it before then, you're basically selling the contract. If you execute it, that means you want to buy 100 shares of Ford at $5. You're guaranteeing that you can buy these shares at $5 if you decide to execute this contract. But most people don't execute, you sell it either on or before this if it goes up. So I only paid $51 for 500 shares. If I wanted to buy not 500, damn, why I want to keep saying 500, 100 shares. So I wanted to buy 100 shares of Ford stock outright, I had to pay $500. So that's the beauty of it, is that you're able to leverage yourself and get a lot more shares for a lot less money, and you're able to sell that contract for a profit if it goes up. Now, that's where I'm kind of confused at. It's like a finagle, like how does this work? How does that happen? But you can research and find out, you know, why it works that way. There's a lot of beginner videos. I kind of know, I can't explain it. But basically, on this, I bought one contract, 100 shares of Ford for 51 cents a piece, or $51. I turned around and sold it. I sold this contract because I panicked. Okay, because I didn't know what I was doing. This is just like my little test option, dip my toe in the water. I did a video on this too, I think. But I turned around and sold it because it went up. You see, it went up to 65 cents a share, so I sold it. You know, and I didn't make about, I don't know, $20, $30 on it, something like that. But still, that's what I made in one day. You're never going to make that in, you know, a savings account or a share account. So I bought by the open one contract, Ford Motor Stock, at a $5 call with an expiration of 29 May. So I could have held this and could have waited for Ford to keep going up and made more money, but I sold it because I panicked. Bruh. And I was just testing the waters. So then I got a little bold and I was like, well, shit, since I made that little $25, $30 and it was that easy, I'm gonna buy 10 shares or 10 contracts of American Airlines. So 10 contracts, right? Which is 10 times 100. That's 1,000 shares of Ford. Of American Airlines. So at the time, American Airlines was like $10. Okay? If I would want to buy 10 shares, 1,000 shares, because that's what this is, 10 times 100, I would have had to pay $9,500.
Stop being a damn
fool. If my math
fool.
is right. Or $9,000 if it's, $9 a share. But instead, I got 10 contracts at 72 cents
What the
each. So that's 1,000 shares at 72 cents each. But of course, I panicked and canceled out because that was like $720. And so you actually stand to lose, if it goes the other way, $720, or depends on when you sell it. Because you don't have to keep it until this call date. You can sell it before at any time. So if you see it start to go south, you might want to bail on it. But if you still got some time, you might want to come back and wait on it. But anyway, I panicked here and I sold it. So I came back and you see this the same day. I said, you know what? Go for it. Did I just smack? Oh my goodness.
What the fuck?
Anyway, I came back and said, let's go for it. I'm buying 8 shares. I don't read this, and mind you, I read this and pinged the hell out of Andre for almost a month. And I read, I watched some videos, and I pinged Andre for a month. Asking him dumb questions, which he patiently answered. Thank you. But it's mostly you're gonna have to, read up and actually look at the videos, beginning option videos, option trading videos on YouTube. But in any case, so I bought 8 contracts, which is 800 shares of American Airlines with what's called a strike price. Strike price, that's the price that you're saying that you're kind of guaranteeing that you can buy it at this price if you decide to execute these contracts. So let's say if I wanted to just increase my position in this company, I could have bought these 800 shares at $9.50, but you can see that's That's a hell of a lot of money. I mean, you know, if I did the math on that, I'm not even trying to figure it out in my head, but I'm sure some of y'all have figured it out already. But if I did the math on this 800 times 9.5, $7,600 frigging dollars, which I don't have, and I didn't want 800 shares. No. Anyway, but the beauty of it is you can sell it at a profit. Cause see, I bought it at 71 cents a share, which was like $710, something like that. No, it wasn't even that much. I think it should show me right here what I paid for it. Okay, it doesn't show me. It doesn't show me, but it was like 530 some dollars, something like that. And so I bought it at 71 cents, right, on May 21st. And you can see I ended up selling it at $1.47, which is pretty much, you know, 50% more than what I paid for it. So I sold it all at $1.47, more than what I bought it at. And so that amounted to, and I think I posted this on Facebook. All right, so here you go. The 8 contracts cost me $573. I sold it for $1,429 a week later. And this shows you how they sold it. You know, they sold it 3, then they sold it 2 more, and they sold another 2, then they sold 1. But that just shows you how they broke it up. And I guess that's because individuals are buying it, but that's neither here. They sold it all at $1.47. Bought at 71, sold at $1.47. And that's kind of the beauty of it. I know that's probably confusing because I kind of jumped around. But essentially what it is you're leveraging your ability to buy a bunch of shares for a little bit of money. And this price right here, this 71 cent, or where you get this from, this is gonna be, if you look at this little deal here, I'm gonna pull up, well, let's do American Airlines. The price you see, that 71 cent, that's here. You're gonna buy it at the bid or the ask price or the ask price or the ask price, however you want to put it. But let's say if I wanted to buy this one right here. I want to buy this call of American Airlines. I'm saying I want to buy a call that this is going to go up, and if I decide to execute it at this strike price, I get to buy this at $11 regardless of what the price is. As long as it's above $11, I'm gonna get to buy however many shares, however many contracts I want to execute at $11. So if I buy 10 contracts, I'm saying I want to buy 1,000 shares at $11 if I want to execute that contract. But I'm going to buy those. When you buy that contract, you buying that contract at 50 cents. So it'll be 10 contracts. That'll be what, $500. So you're basically buying 1,000 shares. If you buy 10 contracts, you're buying 1,000 shares at $500. Whereas if you bought 1,000 shares of straight out of this stock, it would be 1,000 times $11.14, and you do the math. So that's the beauty of options. You can buy more shares with very little money. You know, you're never going to execute the shares because who has $11,140, you know, to buy 1,000 shares. I mean, if you did, it'd be a hell of a bargain, because let's say if this is at $12 and you get to buy it at $11, you can see you could end up turning around and sell these at that 1,000 shares at $12 same day, or as soon as it executes. I don't think there's no delay, but most people don't execute them. Most people sell the contracts. So let's say if this goes up, you buy between 50 cents and 54 cents. You can put what you want. You can put a limit and then put the number in there, either 0.50, 0.51, 0.52, 0.53, or 0.54. I always put the lowest bid price. And if someone executes on it, then you get those contracts for roughly $500. You can buy one contract, two contracts, however. If you buy one contract, it'll be $50. So you see how it works. Or maybe you don't see how it works. But if you go look at YouTube videos, if you can get, like if you got an Ameri-trade account, you get access to this simulator. It's called Think or Swim Paper Money. I can do real trades on here if I wanted to, but you can do paper trades, simulated trades. This is not real money, folks. This is simulated trading. Simulated trading. This is fake money. They give you like $100,000, and then you just go and play with that to see what kind of success or failure you can have without actually using real money. If this was real money, I damn sure wouldn't be showing y'all my damn bank account. I wish, like Cedric Entertainer said, I wish that was my motherfucking money. But that's options trading. So I don't know how clear that was. This is a long video. I'm gonna have to edit and cut it and all that good stuff. But I think you should try option trading. The real simple thing of it is you're able to buy a bunch of shares for a little bit of money, and if you do a call, you're saying, I think it's going to go up. And right now, lately, the last 2 months, that has been happening. Everything has been going up. And you know, if the market goes the other way, then you want to do puts and you're hoping to go down. But right now, all I know how to do is a call. And right now, I'm going to be doing some calls. Practice. Keep in mind, play money. It's real money, but it's money you can play with. You can afford to lose. And, you know, you don't have to get a divorce. Your girlfriend ain't going to leave you. You can still eat. Electricity going to be on. You can pay your car payment. Kids still gonna have diapers. You get the picture. Play with money you can afford to play with. If you got $500 sitting in a savings account, take that shit out, put it over here in one of these broker accounts, and learn how to option trade. You know, I mean, just think about it. If I could make $600 a week options trading, that's huge. That's more money than some people make on their job, working at goddamn, excuse me, I don't mean to curse, working at McDonald's. I mean, I think McDonald's might pay about, $11 now? Still, if you can make $600 something a week sitting at home and just, you know, clicking a few buttons. Come on now. That just makes sense. This is the stuff that people in the know that's in the market, they're doing this and basically supplementing their income by sitting at their desk and learning how to do this. And anybody can do it. it just takes a mindset to say, you know what? I want to figure out how to make my damn money work for me. You know, the risk of this to me is minimal because you can look at it. You can tell when it's finna go south. You know, I didn't look at this every day. I didn't look. I mean, I probably should have, but I'm not day trading. It gave me a date and time. I made sure that I was looking at the market to see what's going on in it. That the bottom wasn't falling out. When I seen that today was a good day, I came and looked at this and I was like, you know what? I've made my money back. You know, I made a 50% profit. I'm out. This went up to $1.71 here. I could have stuck around for that. Who knows what's going to happen tomorrow? It might go up to $2 or $3, but I'm cool. I would say what you want to do is set you amount of money that you want to make on these, or set amount you want to lose. Stick to that and get in or get out. Don't get greedy. That's one of the things that Andre told me that really sticks with me, and I already knew it, but don't get greedy. That's how a lot of people got burnt by Bernie Madoff, is they got greedy. They got stupid and they weren't really looking. This is small chump change, you know what I'm saying? But you can see how this can increase your income. There's people that's making $1,100, $1,200 a week just doing options trading, bruh. So, you know, I can see how you can get addicted to this, but you just gotta be smart and don't get greedy. Don't get greedy. You know, you make $10,000 and you go in here and make a $10,000 option call on something, and it goes south on your ass or north on your ass, and you was looking for it to go, you know, a totally different way. Yeah. I mean, if you got the money to lose, that's okay. But if you playing with money you can't afford to lose, or you going out getting a loan, or you doing margin calls, you doing all that crazy stuff that you don't really know what you're doing, and only play with money you can afford to lose. Disposable income is kind of what I see for this. Now, if you're just going to be buying stocks long term, then pretty much you do like a savings account. You know, like you put money in a savings account, put money in the stock market. If every week you're going to buy 10 shares of American Airlines, or every month, do that. But if you're going to options trade like this, you know, I wouldn't get hog wild. I mean, yeah, I don't know what else to say. I mean, do it. The risk is there, but it's minimized if you pay attention to what you're doing, and you don't get greedy. Don't get greedy. Don't get greedy. Don't get greedy. All right, that's enough of that. Peace. I'm out. Hit me up, DM me on Facebook. You know, I can kind of give you some things that I learned, or answer some questions that you may have about it, because you're probably going to have a lot, especially looking to bid and ask price, because I didn't get it, but some of you may be more numerically intelligent than me with numbers. They just don't register with me too fast, so it took me a little longer. But a lot of y'all probably have already figured this out after watching 1 or 2 videos. Break me off some knowledge, but I'm just saying, get to this. All right, this video is too long. I gotta go. Peace.